Good afternoon and welcome to this week's edition of Halftime Talk. I'm delighted to be joined by Vladimir Langhamer, Managing Director, Supply and Trading at OMV. Welcome, Vladimir.
Well, good morning from Europe.
Yes, good morning from Europe indeed. The beginning of August, Vladimir, oil markets have opened with a slightly downward trend. For the first time in a very long time, there's actually concern about weaker Chinese oil demand. That's hasn't been said for a long time, given that they've been the engine to pull the oil markets out of the doldrums of last year. What's your own outlook for China? Should we be concerned that demand may not be what we were hoping it would turn out to be?
I think China is always a bit long game, and I think the pull down of the prices at the moment is more sentiment driven. Yes, there are data out of China where you have the kind of emergence of the coronavirus, especially the Delta variant, where they are very concerned. We have seen a little kind of lackluster buying cycle last time around, so people are concerned. You had news about the Chinese actually releasing some oil from the SPRs. So I think it's just compounded, and really the last kind of drawdown. I think it's a risk off in many of the asset classes. You had that in shares, late last night in the US. So going forward, I think it is a pendulum. Yeah, it is still, people are very hopeful, then something happens and they're very depressed and then they're very hopeful again. So a lot of what has happened, I think, in the last 2 weeks, especially on the prices, I do ascribe to sentiment rather than fundamentals. I think the demand will still be there. I'm sure China will manage this situation again, as they've done last year. And I think, people just need to be mindful that there will be bumps on the road, but I do think that this is a road to recovery.
I mean, all things considered, with the OPEC Plus agreement last month, at first sight, there was a general thought that 400,000 barrels a day per month from August starting this month would not be sufficient given the demand outlook. But perhaps now with the China wobble, maybe OPEC got it right. Your thoughts?
Yeah, I think there are two levels to this. I think OPEC has shown that they can balance the market. Yeah, yes, they had a disagreement, which I think was bubbling in the background for a longer time. The good news actually for the market is they found an agreement. Yeah, it might have been a little bit more than the market has initially thought, but the market has not shrugged it off, but I think taken it actually as bullish, because now you're kind of de-risking the whole balance on the demand side, where the risk of the whole OPEC agreement falling apart has significantly diminished, unless there's something else. I think they are very much looking at the demand. They will certainly kind of react to that. They have also always said, this path, this agreement, we can change it in regular kind of periods. So I think they will react, but let's see for the data. I think OPEC is very much data driven rather than sentiment driven. And I think they will wait, how fast and what does it really do. So I think the next one to watch for is really what's the Chinese buying cycle, what's the next Chinese buying cycle, some of the industrial production indices coming out of China. And I'm sure they will then react in one way or the other.
There was, for a long period in the first half of the year, the very strong expectation that other than non-OPEC agreement countries' supply would return, particularly Iran, but Libya and Venezuela as well. Let's just deal with Libya and Venezuela first. Your thoughts about their potential to increase supply over the coming months of the end of 2021?
Yeah, I think Libya is, I would say, at the upper limit of the range that they can do, certainly till end of the year. There is, I would say there is another maybe 100, 200 KVD that can come out of that if everything pans out correctly. They have a potential for more, but it needs time and it needs investments. There are elections in Libya, and so around elections, I'm certain things will get potentially a bit more wobbly and certainly a bit more insecure in those circumstances. You might see again, here there. I don't expect it to be dramatic, but it is still a development which can have bumps. As to Venezuela, I must say I have a bit less insight to that, but we don't really see anything much happening from there. The sanctions are still there. Politically, I don't see any developments by end of the year. So, to be honest, I don't expect any change of the status quo in the moment.
And the recent days, we've seen the tensions grow up around the US, Iran, Israel on this tanker, the latest tanker attack in the Gulf of Oman. What's your outlook for that, the impact of this event?
It certainly doesn't help. It was very sad because some people died, and it's not just a damage to a ship, but I think this time it's much more serious. I think the market also already expected there's not going to be much of a change till at least Q4. This event potentially pushes it even farther. I think we need to wait till kind of post-election in Iran, the political establishment to settle down and make their minds what they want to do. So certainly this year, I wouldn't expect any big impact from Iran.
I mean, at the worst case scenario that it becomes escalates into a conflict, which I would think is unlikely, but it does do a lot of damage to already wounded Iran nuclear talks in Vienna, which were due to come back later this month. That looks very uncertain now.
I agree. I mean, it's difficult to negotiate with a partner where it's very uncertain, and the talks were already very fragile.
And there's no shortage of international actors who want to sabotage this rapprochement as such.
Yeah, again, I think it's potentially factions in Iran kind of fighting or not agreeing or not being aligned at the moment. The elections only being kind of a month and a bit past, and I expect for the establishment to kind of settle down and make their minds. In which way? Hopefully in a very peaceful way, because as I keep on saying, I think it's a pity for both sides that there is no meaningful agreement.
So we don't get any more barrels really from Iran to have impact on the oil markets. We don't get from Libya maybe 100 or 2, nothing coming out of Venezuela. Then it's to the IOCs who have had an incredible Q2 reporting season. Yesterday, BP, the latest, bumper profits, dividend payments, share buybacks, even OMV, your own company, had a great second quarter. What impact does that have, do you think, on the willingness of oil majors and independents to invest in new supply capacity, which they've been really holding off for most of the COVID pandemic period?
I think the holding off on the pandemic was, in my interpretation, it's just insecurity, and it's just in times like this you don't make multi-billion-dollar decisions because you don't know. I mean, the market has been kind of volatile even before that, and it was difficult to commit to something 10, 15 years down the road. I think people will look anew on the investment. I also believe that there is an underinvestment, and under this scenario, even without a growing demand, which I'm not saying that's the case, but even without it, where we would kind of flatten out at 100 million barrels a day, you need an investment to bring the oil. You have a natural decline, and as you pointed out, I think there is a gap which it's difficult. Well, it's difficult to close in the short term, and I think the majors will look at where is the best deployment of the capital, somewhere where it's maybe a bit shorter term. We have shale that still didn't come up into the boom where people might have expected. think that has to do also with the insecurity that there's, much larger companies that actually have a big part of the production, and they behave differently. They need to have a capital discipline, and they were waiting off. And of course, this needs to be weighted up on the IOCs. It's a balance between, okay, where do I invest now to have the cash to make the transformation for the fit for 50. And that's just that's another layer of complexity where you need to take into consideration in your investment, and potentially the longevity. Are you going to invest for something for 20 years? Maybe not. So you're looking for the sweet spots, and I think so. You will see IOCs investing again, but probably nothing in the 20-25-year-old years investments where potentially there's a lot of oil, but not now. You need the cash flow now to finance the transformation.
Where do you see that, given all of those pieces, the supply-demand balance for the rest of the year? We're now into August. The forecast for the year remains for the IEA and OPEC to be close to 6 million barrels a day of demand recovery through on the average for 2021, most of it due to come in the second half of the months that we're in right now. We're seeing Europe still not getting back on airplanes too much, either they are in America. So where do you see that supply-demand balance at the moment? We're still going to see big draws because supply is not meeting demand, or how do you see it?
I do see draws. I see material draws. I think the disagreement is more about what's the size of the draws. I'm yet to find someone on the market who would think we will build. I think the demand is coming back, especially as well in Europe. Our experience is, yes, jet is still lacking, but everything else, to certain degrees. You have mobility data in Europe, which are pre-pandemic, pre-2019. I was driving to Austria 2 weeks ago, and you could see, the whole Germany kind of migrating south. So
in their cars rather than in their airplanes.
Yes, in their cars rather than on the plane. So it is. We see really a good demand on the road fuels. You see incredible demand on the petrochemicals because partially of the arbitrage being shut, but especially on the demand on the consumer plastic. So I see it actually relatively bright, and therefore I think it's really down to OPEC to manage it in a sense. They have to. I think they have to be a bit careful because, as we've seen, China can also kind of start to manage it with their vast supply inventories. So they need to strike a balance, and I think they will.
In terms of that COVID resurgence, the Delta variant, which is clearly underway in most of the world, but notably in the US, where they're putting back in mask mandates. In Europe, obviously, we saw the spike in the UK, other controls and enforcement, if you like, on vaccinations in European countries. How do these things coexist, do you think, going into the rest of the year? Are we now comfortable? Are we now on top of coexisting with COVID, and economic performance is healthy, like we saw manufacturing PMIs out of Germany, a bionic above 60? This coexistence for the rest of the year.
As I already mentioned, I think, we will need to find some kind of a coexistence. It will not be a straight line. There will be still kind of bumps in the road. To be honest,
but it does look like the markets, the oil markets, the energy markets are quite comfortable with this coexistence.
Yes,
they're not concerned.
The data suggests, in UK you had a big surge on cases, and it was all Delta variant. I mean, they are now actually falling. I think the vaccination program has shown that it can slow it down. It certainly prevents the more severe impact of COVID, which is the pressure on the health system. it prevents to large degree deaths. So the severity of the impact, I think, also the perceived severity of the impact is much less. And I think governments are now much more willing, and people are much more willing to take it that yes, we will have to live with this. We will have to. This is not going to go away. So every resurgence will not spook the markets as much as it would last year, and the markets can work with it now. So it will coexist, but I'm sure there will be. Just keep on repeating, some bumps on the road where the prices will go down.
But these are bumps. These are not the changes to the trajectory of the trend line.
No.
The recovery is locked in. Supply demand balance is roughly where it needs to be to keep prices above $70 a barrel.
Yeah. And what I keep on saying is kind of this crisis. There was an incredible loss of life and grief and everything, but to a certain degree now. Material didn't get destroyed. It wasn't a large
bombs on buildings,
natural disaster or anything like that. So you really, to a certain degree, can pick up where you left off. I'm not trying to put it lightly or something, but I think
but understood. Yeah, clearly
advantage. And I think the Western world has managed, the kind of the economic downturn quite well, because you didn't lay off people. People kind of stayed.
But perhaps that's all yet to come, Vladimir. In terms of the rest of the year, we're going to see the end of stimulus, the end of support for unemployed workers or workers disrupted by COVID, support into companies that have been struggling because of the COVID impact. A lot of government support is going to be pulled back in the fourth quarter.
It will, but you already see that where it's being pulled, or in Europe, I think, and US as well, they're creating a lot of new jobs. Yeah, so even the struggling kind of companies that might at the end of the day kind of go bankrupt or let people go, there is an incredible shortage of actually people. A lot of industrials saying, we have full books, but we can't actually fulfill those orders, not because we don't have the people. And so I'm positive on this, that yes, it has to be managed by the governments. Can't be just kind of stopped and don't look at it ever again. But I think the economy is actually doing, for me, surprisingly well.
Yeah, it's certainly.
You could see it on the the International Monetary Fund, predicting kind of growth of above 5%. I mean, that's quite.
And you had the Fed chairman last week forecasting very robust job growth in the US. Just to wrap up, Vladimir, structurally the markets we're seeing with the contract, the WTI, Brent, Merban, we're seeing the spread between WTI and Brent sort of keeping American barrels out of the Asian markets. What's your sort of look to the structural makeup of the market in the coming months?
Yeah, it is an interesting situation, because I think for the last 3 months, we have what I call a very, very regional trading. Crude from US kind of stay large in the US and the Atlantic Basin. You have the EFS kind of quite open, which basically bars a lot of even the North Sea barrels to come to Asia. And it's interesting that this holds for such a long time. I think there need to be some kind of a catalyst, somebody trying to break through that, where it all kind of nivelates back to the levels where there is quite a lot of exchange. But to be honest, I am a bit amazed of what that event would have to be, or what would it have to be, because you have EFS on 4. I mean, it's difficult to bring, with the backwardation, it's difficult to bring crudes from the North Sea to Asia, and similarly it is with the US. So, to answer your question, to be honest, I don't know. I think it's in my eyes it's unprecedented for the duration of the time, and I just kind of what would have to be the event. We're still looking for it.
Well, we will keep our eyes open for the rest of the year. Thank you, Vladimir Langhamer, Managing Director, Supply and Trading at OMV, for being our guest on Halftime Talk this week.
Thank you very much, and have a good week. Bye-bye.